Good morning, everyone. Welcome to the European crossover webinar. And we just got the European market manufacturing PMI came in at 53.7, right in line with the expected pull of 53.7. We did have the earlier European manufacturing PMI starting off with the Spanish PMI, which came in pretty much in line also here. 50.8, 50.5 was the poll. Then moving on to the Italian PMI, 53.2, basically all right in line. French, same thing here, off by just a hair. German PMIs, all of them coming pretty much right in line. We do get manufacturing, UK manufacturing PMI, which is going to be at the bottom of the hour. And then at the top of the hour, we'll get Eurozone producer prices at the top of the hour. Then we roll into the States. We'll get our usual weekly jobless claims numbers, as well as we'll get personal income and consumption, both at 8:30 Eastern. And then at 8:30 Eastern, we will get Canadian building permits and also U.S. manufacturing PMI final at 9:45 Eastern, along with ISM, which will be key. ISM manufacturing, which will be at 10 a.m. Eastern. Then we'll take a quick look where we stand here on the FX portion. Bear with me. I've seen the euro going and pair back a little bit, but still in a relatively tight range. And take a look at with the cable. Same thing here, just a little bit on the weaker side here with the cable, but nothing demonstrably strong as far as a move. Then take a look at here in the cash dollar index. Coming off of those lows. We got some shakeup in the indices yesterday when it looked like there's not going to be a stimulus. Then they turned around and came back and said, yeah, there is going to be a stimulus. And we moved off of those lows, and we'll take a look where we stand there. And Irina says, good morning, Irina. And we'll jump into the indices just for a quick overview. So you can see things have turned around. We got pretty wild yesterday. I was looking for this, had posted this in the room, looking for a pause, what I called a pause area, which was at the 11,491. We'll see it here on the 2-hour chart. There was it right there. And you can see we actually formed also a, which I didn't even see at the time, it had a hanging man right there. If he pulls back, you can see it a little clearer. See that hanging man right there? And then we saw a really good pullback as the market swung back and forth. And then with the news that, okay, it looks like they will have a stimulus package, and we've just been working higher. Back to this 11,490-ish area. Looks like we got up as high as 11,512. 526 was the high, and on a rebound we had 518. So we've kind of come back a little bit off that, but still we're still have the potential to move higher. My area that I've been looking for this potentially to move to is 11,555, which is a 50% of the return back here. And oh, look at this, because I know that that's not 50%. Hold on. Yeah, that's crazy. It's 50%, but it doesn't look like it's 50%. Looks like it should be higher. I was thinking, man, how did I make that mistake? But sure enough, that is 50% of the move, which that's what I have marked off there. But sure, really doesn't seem like it'd be higher for 50%. But anyway, that's 50% of the move. And yesterday, that high we had at 525.5, and that confluence here with 127% extension of the prior evening into the European moves here. We'll take a look at the SPOOs. Pretty good move here. 50% is going to be 33.87. And taking a look here with the gold market, I've seen a pretty nice rebound. We had been looking for a move down here to this the zone here, 1827 to 1844, with 1840 being the VWAP off of the March lows. We did get as low as 1850. We've since made a run up here, but you can see here we have been stymied by the VWAP from the June lows as on a return rally. Haven't paid too much close attention to gold, but just wanted to point that out here. And crude oil, nice real rebound off that $38 area, come back up in here and kind of pull back a bit. Going back into the NASDAQ. Still think we'll probably try and make a move up to this 50% up here. So let's go on and guess we can pull out the news. Leave it on here, I guess. So the dollar loses ground in hopes for compromise on U.S. stimulus. The dollar was on the defensive at 1 week lows on Thursday, as robust U.S. data and fresh hopes for U.S. fiscal stimulus had investors confident about economic recovery prospects to seek out riskier currencies. Republican President Trump administration has proposed a coronavirus stimulus package to House Democrats worth about $1.5 trillion, and hopes are rising that both parties will reach a compromise, along with the U.S. labor and manufacturing data that helped stocks to rally, and the move pulled the dollar to a 1 week low of 93.66 against a basket of currencies. Earlier in the Asian session, the New Zealand dollar extended gains to a 1 month peak of 66.35, the Aussie to 71.83, also the strongest in a week. The two sides have come a long way, Westpac analyst Sean Callow said of the possible relief bill. The rhetoric is reasonably conciliatory. I think we're getting close, he said, adding that an agreement would help the mood in equity markets and likely spill over into the currency trade, boosting riskier currencies as at the dollar's expense. At the same time, Jaws figured that the U.S. private employers stepped up hiring more than the forecast last month. That the Midwest manufacturing grew faster than expected, also fed the positive sentiment. Chinese data on Wednesday had also shown the recovery on track in the world's second biggest economy. Nevertheless, firmness in the safe haven Japanese yen indicated that plenty of underlying caution still remains. The yen held at 545 on Thursday after climbing in the wake of the chaotic first U.S. presidential debate. The yen also ended its best quarter since mid-2019 with a 2.4% gain over 3 months to September 30th. Gains in the euro were also muted after the European Central Bank President Christine Lagarde hinted that a strategy overhaul and a more accommodative approach to the inflation could be possible. The euro edged up a quarter basis point on Wednesday and held at 17.24. The pound edged up to 29.41. Final purchasing manager index figures are due in Europe, and we just saw those in Britain later on Thursday, followed by the ISM manufacturing survey in the U.S. and jobless claims, all providing an update on the progress of the global coronavirus recovery. We'll have to keep a key eye on that because, like I said, with the ISM, that is going to potentially would maybe allow for the in the case I'm looking here with the NASDAQ, to push up to 1155, or the SPOOs to get up to 3387. Both will be 50% retracements, respectively. Speeches from Bank of England Chief Economist Andy Haldane at 10:20 GMT. ECB economist Philip Lane at 15:45 GMT will also be closely watched for hints for the monetary moves. So I want to keep track on that. Dollar outshining and beating yen in the battle of the safe havens. Volatility across asset markets is fueling a bounce in the battered dollar, showcasing the currency safe haven status and worries over growth about the U.S. political strife. The buck is up nearly 2% in September as of Tuesday against the basket of currencies, on tracking its best monthly gain in 14 months and outpacing the performance of many of the other destinations for nervous investors. Gold, for example, is down nearly 4% in September, while the S&P utility sector is little change, and the Japanese yen is flat. Yields on the 10-year U.S. Treasury yields, which move opposite to price, started the month at 67 basis points and last traded at 64. Several catalysts are stoking the dollar's rebound, which has put the greenback at the highest level since late July. The U.S. currency's 8% decline from its high values in March has left it looking comparatively cheap among assets like gold, which stood at the all-time highs last month. The yen safe haven status, meanwhile, may have suffered in the wake of the pandemic-era collapse in global rates. The dollar's insurgence has to do with the response of the capital markets to the global wave of de-risking, says Thanos Bartos, managing director. At the same time, many of the factors that made the dollar less attractive in recent months appear to be dissipating. COVID-19 cases are accelerating in Europe, threatening expectations of growth that boosted the euro. And to me, that's the main reason. You know, people talking about, the dollar, the indexes were coming off. It didn't match up. I said this about more than 2 weeks ago, and that to me was the reason why the dollar faded. We talked about that. The factors are, in the recent months, appear to be dissipating. COVID cases are accelerating in Europe, threatening expectations of growth that had earlier boosted the euro. Additionally, speculation of the possibility of negative interest rates in the UK, Australia have dimmed the allure of those currencies to some investors, although such a move seems far off. In the US, certainly stemming from the November 3rd presidential election and the shrinking likelihood of lawmakers agreeing on a fiscal stimulus package. Charles Nuttenforth, foreign exchange strategist at BCA Research, said spikes in equity volatility have tended to boost the U.S. currency, as does turbulence in the foreign exchange, adding to trading or the longer periods of placid trading. Broader currency market volatility, as measured by the Deutsche Bank, shot up to 8.4% on Tuesday. Well, you can see why, because we've seen the cable just up and down like crazy. Others see the rally as a chance to take profits on the dollar or place bets on the currency. I have been a dollar bull, but I am using this opportunity to sell dollars when everybody's mind said Manchev Porgeyev, head of currency at BNP. The dollar's rally received a tailwind for the nasty short squeezes. Investors betting on the U.S. currency were forced to unwind their bets in recent weeks. The possibility of further unwinding remains, and bets on a weaker dollar and futures markets stood at $33.6 billion in the latest week in data from the CFTC. And you can see here, we're still pushing up a little bit higher here. We're 11,509, and we do expect this move here in the NASDAQ comparatively to make it up here to 50%. If you look here, and I just want to touch a little bit closer. So 1155 also confluences here with this little bit of a triple top here. You see that right here? I mean, it's coming off of this low, but I'm just saying it's right here, 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 here. Maybe we could push up to, and you can see here, 11605. That would be key, and maybe some good news will allow us to push up to that level. Pretty good area here, 605. Solid. Let's go to mark that off. There you go. Let's go move into the FX analysis. And bear with me while I go in and pull up the bias chart. Seen some decent moves up here in, bear with me. You can see in pre-market. Look at Microsoft up at 212. So even though with the rebound, we're still pushing up higher. You can see here with Apple at 117 and still a nice rebound. Remember yesterday, these were the highs here. We paired back. Now look how we rebounded on this stimulus talk. So we're pushing, making some good pushes here. Let me show you something else here. Take a look here with Facebook, 264.5. Tesla up here at 439. It wasn't that long ago, remember? They were sub 400 at the beginning of the week, and look. But they're kind of an outlier the way that thing trades. But and Amazon here at 3160. Yep. So let's go and move into the analysis. Taking a look at the euro. So the euro closed slightly lower after pressing to new highs. Resistance on Thursday will be 1763 with support at 1658. And onto the cable. So the cable closed strongly on Wednesday at key level 29.23. Resistance on Thursday will be 29.66 with support at 28.33. Onto the Aussie dollar. Man, this thing, boy, what a strong move. So the Aussie posted a solid day rebound. Resistance will be 71.90. Looks like we got there, just a hair above it. With support at 71.11. And on the Kiwi, so the Kiwi saw a solid follow-up close on Wednesday after Tuesday's good close. Resistance on Thursday will be 66.43 with support at 65.89. And on to the dollar CAD. The dollar CAD slid back on Wednesday after taking out the 4 prior closes. And you can see that right here. Support on Thursday will be 32.68. You see here, that's key level here, this 32.68. We'll pull this back here so you can see that right there. Will be 32.68 with resistance at 33.70. Obviously, the rebound in equities is certainly impacting these majors. We'll move on to the dollar peso. So the dollar peso closed below the support level of 22.14 to close at 22.10. Support on Thursday will be 21.96 with resistance at 22.18. Well, we've actually dipped a little bit lower right here. Actually, probably make it down to about 21.88. But we have 21.96. I guess we can actually, we'll go with the 21.92 here because look, that was a solid level. I didn't think we'd make it that far. We actually exceeded a little bit, but I saw that and thought, well, I don't think they'll quite drop. They may just, because we had a pretty good pullback here, that they may just dip down to 21.98 and dip back, but obviously we pushed even a little bit further. So that 21.92 is key. And on the upside, would be right here at the 22.10 area here. Onto the dollar yen. So the dollar yen paired back slightly on Wednesday. Support will be 5.12 with resistance at 5.71. But boy, we're not moving anywhere. So the dollar index continued to weaken on Wednesday. Support on Wednesday will be 93.61, which you see right there. It looks like that pretty much nabbed it right down the lows, with resistance at 94.33. And onto the cross rates. Well, this thing has continued to go and strengthen, and let's take a look where we were on the bias chart. The majors, I do the analysis in Asia, and then I post it to the bias chart technical if you're early and trying to see what we had for analysis ahead. But I do those. The only one I deviated today was the dollar peso I think I had for 21.96. I did dip it down to 21.92, but the other ones, the analysis remained the same since as it was when I posted it in Asia. The cross rates I don't, so I just take a look from where we were and try and get a projection as to where we may go to. So we did add on to that, and our resistance on that was going to be 69.84. That was yesterday, and the high was 69.90. That wasn't too bad. Looking forward, how much further can they push? I'll be looking at the high bar right there, the close, which would then be 70.29. That may be a bit rich considering we've already had a nice rebound. And on the downside, right here, 69.54, at least for today. Moving on to the euro yen. I saw a little bit of a pullback here yesterday. And that was 24.01. We had 24.32 as our resistance, and that was got up to 24.24, so not too far off. Resistance is actually going to be this close from the prior day, not from yesterday, but the day before that, which would now be 24.10. And support on this pullback is going to be the low right here on that bar, which should be 23.27. Moving on to euro odd. Boy, we slid off pretty good. I mean, look, we had 63.40 here. That level, I'm not sure if we had that as our support. Yeah, we had 64.10. So this thing, look at this. Boy, what a move yesterday. Obviously, we saw that even in the against the dollar. This odd really strengthened. Pushing and looking for support now for today, and boy, it's already had a pretty good pullback. We'd actually go and throw a fib on here, see if we can see anything there. You can see here 63 even would be the 61%. And for resistance, we'll go right there with 63.77. So you can take a look at the euro kiwi. Obviously, we took a dip here, but as the Antipodians certainly strengthened yesterday. And this close took out the other 4 prior closes. So looking for support. Right here, you see here that confluence is almost with this high here. So we'll use that as an area for support for today, which would come in at 76.59. And resistance, well, we've had a pretty good, it's going to be the low on this day. So that comes in at 77.32. And let's go move into the Aussie yen. Pretty good move here, obviously, in the Aussie. Like I said, the antipodians. What I'm actually going to go with, I'm just going to go with this moving average for the high, which is the high for the day, which is 75.91. Go with that. You can see here how well this has held it. You see here? This exponential moving average here and here. So we're going to go with that. And that actually comes in 75.89. The high was just a couple of pips higher. So 75.89 using the exponential moving average, which is held very well on the upside and the downside. And on the low, with it trading pretty strong, I would say the 75.23, but we can move it up a little bit higher than that. Let's go with this high right there. And that confluence is with this close here. It's not much though. But we'll go with that anyway, which is 75.66. Oh, we're going to lower it here, right there. 75.50. Onto the guppy. Pretty good pullback here in the guppy. And see here the resistance here at 36.42. The key level, go with that. With support 35.26, just keep it simple. And lastly, sterling odd. And we posted this pretty good setup here in the sterling odd. We know that I'm surprised this hasn't even weakened even further. But we've been seeing strength in the sterling in and of itself. So let's go and take a look at the 2-hour chart. Pretty good volume here. So coming across there. Well, that's where we're at right there, which is 78.93. See right there, these touches here. And this little bar here, right there. 70, let's call it 78.86 for support. With resistance coming in at, you can see the break here, 80.04. And that'll do it here for the bias chart on the first day of October. We'll get that posted in the room. And thanks for joining us here in the European crossover webinar. Already was asking about Apple at 115. It's already too risky, correct? And look good. Looks good. We've already had a pretty good stretch in Apple. I'd be hesitant to step in right now. I mean, if you're trying to scalp it, it's a little bit different from, but it's already had a pretty good little run. We make it once again if we get some decisions, just like the same thing. Look at the Nasdaq going up to that 11,855. I mean 11,555. All right, thanks for joining us here, and we'll see you in the chat room.